Hi, I hope you and your family are doing well. This is a market update for the month of November. We had lots going on in November. We had a presidential election. President-elect Trump has made a whole pile of promises. The markets have very favorably responded. November was an absolutely super month. The S&P 500 was up 5.6%. The TSX was up 5.74%, and the MSCI EAFE was up 0.94%. I'm going to pass it over to the guys, and they're going to dive a little deeper on what was going on. Take care, and I hope you all have a wonderful holiday season.
November was a big month for investment markets in North America, and the bulk of that push did come from our neighbors to the south. In the US in November, the US Fed did cut their key interest rate by 25 basis points on November 7th. But as we're all aware, the biggest news of the month came 2 days before that, when the US presidential election race came to its conclusion with Donald Trump and the Republicans winning the presidency, the Senate, and the House. Now, investment markets received all that information very positively. The S&P 500, the NASDAQ, and the Dow all reaching record levels as investors try to price in Trump's promises of tax cuts and tariffs, fueling the US dollar and sparking the sell-off of US government bonds. Trump's further promises of corporate tax cuts and deregulation will tend to encourage financial innovation, which will keep markets active for the next little bit. Now, for all of these reasons, we do expect money managers to keep an overweight to the US, at least through the first part of President Trump's term.
While a lot of Trump's promises are viewed positively in the short term by markets, there is some concern around the potential inflationary effects of the tariffs that he's proposing, especially those tariffs against key trading partners in Canada and Mexico. Trump's threatened tariffs of as much as 25% on Canada and Mexico until we're able to, quote unquote, get our borders under control. Now, I'm not too worried about this personally as it relates to exports coming from Canada personally. I think, we all understand that Donald Trump likes to view himself as a businessman, and he's just setting us up for probably some negotiations. Ultimately, our border is quite secure with the U.S. Certainly, we could make some improvements, but the amount of drugs or illegal immigrants flowing through our border as compared to Mexico is minuscule. And so I think they'll probably go back to the negotiating table on certain key products that are flowing across the border as far as tariffs go. But certainly the tariffs against countries like China and other major global producers are probably more likely to actually happen. And those certainly could be inflationary. So we'll keep an eye on that as we head into Trump's second term here.
Canada's investment market also saw healthy gains in November, and much of that was driven by our information technology sector. But we also saw gains in real estate, as our interest rates have continued to fall throughout the year. And in November specifically, we saw listings of existing homes start to increase throughout the month, just slightly. Canada's GDP data for the third quarter came in below expectations, showing that our economy grew at 1% annualized, which is lower than the Bank of Canada's forecast of 1.5%. Now, growth over the last quarter has been driven mostly by household and government spending, with household spending specifically seeing spikes after each of the Bank of Canada's rate cuts.
We think that rate cuts are going to be a key determinant for the performance of Canada's economy heading into 2025. We're seeing some weak export data, weak business investment in Canada, but these lower interest rates should help the Canadian consumer, should help Canadian businesses allocate capital to more business investment in 2025. But the nuts and bolts of it is that obviously our GDP numbers are quite weak in Canada, especially as compared to the United States. And so we're going to clearly see the Bank of Canada continue to cut interest rates at a faster pace than we're likely to see the US Federal Reserve do. And so for December, we're pricing in at least a 25 basis point cut by the Bank of Canada, and it could be as much as half a percentage point. Like we've seen previously, just based on the GDP data that's going to come in between now and when they meet in December.
In the short term, all the news surrounding Trump's victory and his second presidency are all being met with positivity. His promises of tariffs, immigration, and deregulation are all being viewed extremely positive by the US people and their economy. And this will be a tailwind for investment markets as we head through the ending of 2024 and into 2025 as he takes office.
In Canada, the investment markets have performed quite well this year despite lower economic output as compared to the United States. Now, the tailwind in Canada is, of course, that the Bank of Canada is going to continue to cut interest rates heading into next year and probably throughout most of next year to continue to hopefully spur along our economy and get it going at a robust pace again like we're seeing in the United States. As always, if you guys have any questions, don't hesitate to reach out to myself, Harry, or Kevin.
Take care.